The African Insurance Organization has long warned that the lack of information and communication technology infrastructure is holding the African insurance market back. Rhys Collins, head of African operations at SSP, says modern technology overcomes many challenges, and this is increasingly drawing new players into the African insurance market. He joins us in studio now for a closer look. Rhys, thank you so much for making the time. Now, let's maybe look at the backdrop first. What's changed in the insurance industry in Africa that necessitates us to review the business models?
So there's a number of things. Essentially, you've got some legislative changes that are being driven essentially as a consequence from what we call Solvency II around the rest of the world and SAM in South Africa. And what that's really requiring is a better governance and better sustainability in insurance organisations. And that's manifested itself really in 4 or 5 areas. The first one, particularly in East Africa, is around the makeup of insurance companies. So there's been recent regulation that has required composite insurers to split. So life insurance companies now have to separate from short-term, what we call short-term insurance companies, instead of being one unit. And what that's caused is obviously from a capital adequacy point of view, instead of proving it from one organisation's perspective, you have to prove it from 2 organisations' perspective now. The economies of scale you get from having a larger organisation have gone, and the opportunity to cross and upsell to your customer base across the 2 different types of insurance line has disappeared. From a governance perspective, you've got limits on shareholding, so in some countries a limit of 25%. You've got the fiduciary duty of directors is now more onerous, and proving and reporting on financial strength is crucial too, and again that's around solvency ratios and capital adequacy requirements. Now what all that means is insurers are having to change their operating model, so on that side of things there's a very good reason to look at technology as one of the drivers of effectively making an appropriate change for the organisation. On the other side you've got economic change, which is driving opportunity. So the insurance companies have got regulatory compliance investment they have to make, but there's an opportunity around an emerging segment of economically active people. And to put some numbers to that, by 2020 it's estimated that more than half of the 244 million households across Africa will have an income of over $5,000 a year, which means more discretionary spending, which means more people looking for products and services, some of which will come from insurance companies. So the insurance companies are battling a little bit with how do we comply and at the same time take advantage of the opportunity. So lots of drivers for change happening.
Of course, and in the midst of those 2 challenges that you've noticed, there's also the need to be increasingly competitive. So how does positioning IT almost at the epicenter of your business model in this particular industry likely to drive your competitiveness? Well,
there's kind of 2 ways of looking at that. A lot of insurance companies are struggling with technology as it is anyway, and the term legacy systems is a common one where the system that is in use by the insurance company does not support the business needs. It's not agile enough, it's not flexible enough, the cost of change is too high, things like that. So there's the need and the drive to move off older technology. At the same time, there are newer technologies that can be embraced that would allow insurance companies to respond to these changes in the economy. For example, we can take mobile devices as a good example there. Consumers these days are expecting to interact with any service provider or many service providers in an online way. And historically that's been through desktop, PC, laptop, but smartphones are now able to deliver those products and services to the consumer remotely. Statistics have shown that people carry their smartphones with them 16 hours a day. As the cost of technology reduces, so more and more people will have smartphones. So mobile is a great example of demonstrating how technology can help.
But what about the countries where we find that broadband infrastructure, for example, really hasn't taken off, and also from a policy direction that we don't see, governments prioritizing information technology infrastructure? Are these markets likely to be left behind?
I don't think so, and our view is that the internet as a mechanism of transacting is certainly in the markets that we focus on more than adequate. So if you look at Ghana, Nigeria and West Africa, you look at Kenya, Tanzania in East Africa, the speed of the processing and the bandwidth is adequate.
Let's talk very quickly skills and capacity to drive the new changes that we're seeing in the industry. Do we have them in African markets?
In the newer technologies, they're definitely there. One of the problems with the older technologies is that there is a skills shortage, and the cost of those skills where they are available is typically high. So that's another driver to move from old to new.
And on that note, before we wrap it up, I just also want us to look at the regulatory environment in terms of regional integration in particular, where we're seeing business increasingly becoming prominent across countries and across multiple borders. How important is it to have coordinated regulatory environments that regulate this particular industry across countries in one given region?
It is reasonably important, but obviously there are different pressures within different markets. However, I think it's generally understood and widely accepted that the programs that are being put in place by the various regulatory bodies around good governance, particularly financial strength, which will demonstrate sustainability of a business, is good because it will ensure that overseas investment continues to be attracted to the continent. So that's not a problem.
That was Rhys Collins, Head of African Operations at SSP.